Hello everybody, welcome back to my channel. This is David Mazdab, the Blue Tiger. I send my love, my blessings, and my greetings to you in whatever part of the world you're in. And in today's video, I'm going to be talking about how you can recover from a loss and not actually wound yourself more. And I'll be doing this with real life trade examples that were called out. So without further ado, let's roll the intro. So firstly, before we get straight into the video, I want to show you guys my socials. I got my public Telegram where I post signals absolutely for free. You can hop on now while it's still free. We've been very profitable for the past few weeks now, and the previous month too. September has been good too. And also I got my Instagram. I always post valuable content on my stories every day. And I also got my Twitter, so you can help me roll my Twitter and my Instagram up to 100 followers. I'm really gonna appreciate that. Then also one more last thing I needed to do. I want you to take a few seconds of your time now to just hit the like button. Like, it really costs you nothing. Just hit the like button, right? When you like my videos, it makes YouTube recommend my videos to more people. So you can just show your appreciation for the contents that I put out by liking my videos. So I'd like you to like my video right now and also hit the subscribe button. So I'm going to give you like 5 seconds to do that. All right, thank you. Let's get straight into the video. Now, getting straight into the video, if you check my previous video that I posted, I did my weekly analysis and I said I was expecting certain levels to get hidden as 100, US 30, and and S&P 500. And as you can see, the target has been hit like this low, the June's low on Friday, 17th of June, got hit. And also my target in US 30 got hit too. So we're just waiting for NAS 100 target to get hit. So the first point I need you to take note of is have a maximum amount of loss you can take in for a day. Yeah, have a maximum amount of loss you can take for a day. Now, personally, for me, there's just two losses I take in a day. If I take the first trade and it's a loss, I go in the second time only if I see a reason that matches with my plan, my trading plan, and my system. If I go in the second time and it's also a loss, then I'm done for the day. I don't have to do anything again. I don't have to take more losses. I don't have to try to make the loss back immediately. I'm just done for the day. Now, this is very important because let's say you're in an instance where you're in a losing streak of 4 trades, right? And you risking 2% or 1% of your account per trade, and you lose 4 times in a day. You're down 4% or 8% of your account. That's really gonna mess up with your psychology. So it's very important you have like a minimum amount of loss you can incur for a day. It helps you to think straight so you don't make some mistakes while trying to make judgments for your trades. So I'm going to show you real life examples, trades that are taken and called out in my public Telegram for free. Now, I called 2 trades out yesterday during the recording of this video. I called 2 trades out at the 27th of September. That was Tuesday. One was a sell and the other was a buy. The sell was a loss and the buy was a win. So I'm going to show you why I took this sell and how I could have avoided taking a loss and how I recovered from that loss. Now, you see this trade, that's the same trade that's here. Now let's get straight to like the 1 minute time frame so you can see it yourself. This is that exact trade. This is it right here. So it was called out in my public Telegram. Now, why did I take this trade? And how could I have avoided this loss? So I came into the market looking for a reason to sell, right? Now going to my first time frame. This is my drawn liquidity, which is on the previous month's. This is June's low here. That's my drawn liquidity, and I've called it out in my YouTube in my previous weekly analysis. I said I was expecting this low to get taken out on NAS 100, so that's my reason, that's my target, and reasons why I'm looking for sales on NAS 100. So I came into the market looking for reasons to sell, right? And I was looking for a run above buy side liquidity so I can use that to sell down to sell side liquidity. And also, let's see what price did. You see this little thing right here, that's an order block. That's like an order block. In the 4 hours time frame. Then also look at the time. Let's look at the time price went to that went to that zone. Price went to that zone during the AM session of New York. So this is the opening price, 9:30 a.m., which is 2:30 a.m. in my time zone, my local time zone. So I'm gonna put that 9:30 a.m. NY time, NY open. So the market opened, ran above this buy side liquidity, which was the previous day's high, and had a shift in market structure. Now let's go to the lower time frames. I'm gonna take this out now. Going to the lower time frame, we saw price had the first move, tapped into the false order block, ran above buy side liquidity, and had a shift market structure with displacement. That's absolutely my setup. I'm going to look for reasons now to sell. So, why did I sell here and why did I put my stops above here? Now, here there's a 5 minutes order block. If I can draw it like this, you can see there's a 5 minutes order block right here. But I had a very aggressive stop loss. Now there were times when the market wouldn't actually take out this high where my stop loss was. So this is where my stop loss was. And this was the little mistake that I made, if I can call it so. This is where my stop loss was. I'm going to make it red. Now, there are times in the market where the market doesn't actually take out these highs. It actually respects this high. So there's little order block right here. And sometimes it doesn't take out this high. This is one of the few instances where it took out this high. So sometimes it doesn't take out this high. So I wanted to have like a more tighter stop loss so I can increase my gain. But instead, if I actually use the high of the order block, I would have been safe. And this was the safest high. It was the aggressive high, but I went with the aggressive one. So I would have avoided this loss if I actually used the main safe high, which is the high of the 5 minutes order block after this 1 minute fair value gap was filled in. Then it broke down and gave another fair value gap right here, which where my entry was. So if I used here instead, because my stop loss, which was the safe stop loss, my trade would have been safe and it wouldn't have been a loss. So yeah, there's the reason why I took the loss. Now, how did I react to this loss? When I finally saw that I wasn't wrong and that price was going in my favor, and I was only wrong in the side of my stop loss placement, like I used the aggressive stop loss instead of the safe stop loss. So my analysis was still right. Price showed me that yes, it was going in my direction. What did I do? Now, the next point that I needed to take note of is whenever you feel that need to revenge trade or chase price FOMO, just log off for the day. Like it's not really worth it. Just log off for the day. Because most time it's not really gonna end good for you. I've been in such situations before. Now, after I saw the price was going in my direction and I got stopped out, what I would do before when I was trading earlier was I would find a way to get into the market. And I would like, oh no, price is going against me. Price is going in my direction and it took me out. Let me find a way to get in. And look at this, my stop loss would have been so wide, and this doesn't even match my trading plan. So like it's not worth it. Now let's see what I sent to my public telegram. I said, since my stop loss was too aggressive, I'll be shorting as 100 again once given the opportunity. If I saw no opportunity, then guess what? I'm done for the day. Like, fine, I just lost one trade. Yeah, it's more about the long term success and not just about the short term. It's about how long can I be profitable over time, and not just about having a winning trade today and having a losing trade today. No, it's not about that. It's about the long term process. So when I saw this, it was approaching the launch hour, and I don't really trade the launch hour, so I said I'll be trading shorting as 100 for giving the opportunity. So I was expecting maybe a retracement down to some points up here to have a sell, and I never got that. So yeah, I had no trade. I didn't chase price. I didn't do none of that, and it was approaching it was approaching launch hour, which I don't actually trade, which is this zone right here. Launch hour, I don't really trade launch hour. So yeah, I just went to do something else. Like I had to do something else. I didn't like chase price or freak out just because price told me that I was going in my direction. I let it slide. So that's one important thing you need to do. I know this is something a lot of traders face. I know this is something that plagues a lot of traders because I've been in that situation before. But I want you to listen to this. Don't chase price. Don't FOMO. Don't try to revenge trade. Don't do none of that. Like it's not really worth it. Let's go straight to the next point. Come on, don't tell me you watched down to this point without liking this video, man. Just give this video a like. It doesn't take anything from you. So I'm gonna give you 5 seconds to do that now. All right, thank you very much. Let's get back to the video. So the next point is stick to your rules and patiently wait for the next trade. Patiently stick to your rules. If you don't see a trade, then fine. Done for the day. Yeah, you took one loss. Okay, you come back the next day. That's not the end of your trading career. Stick to your rules, man. And my own rules. I trade just the AM session of NY and the PM session. So this second trade actually came from the PM session. Now I'm going to explain to you why I took this second trade and how I recovered from the first loss. So this second trade was actually not a trade that I always take like that, but I was pretty much confident in the setup, right? So this was the reason why I took this second trade. If we also checked S&P 500, you could see that that same low, right, that was taken out in us 100 right here. That same low, which wasn't taken out on us 100 rather, was taken out. This was the low of Friday 23, and also this low right here, Monday 26th. These two lows were taken out already here. And one thing I know is once buy side has been taken out, one sell side is next, this sell side. And the next thing price tries to take is buy side liquidity, internal buy side liquidity, or move back to a premium zone. So I saw this low wasn't taken out, and this low was taken out already on S&P, but it wasn't taken out on us 100. So there's something else I saw that as a bullish divergence. And also I'm going to put the bullish divergence, bullish SMT divergence. There's something that I learned from ICT, the inner circle trader. So I saw this as a bullish SMT divergence. Hold on, I missed. All right. I saw this as a bullish SMT divergence, and I expected like a move back into some zones in premium. And this was an order block, and this was a 15 minutes FVG. So I said, okay, one thing price does this. After the AM session has moved in a particular direction, we can expect the PM session to go reading the highs or the lows of that particular direction. In this case, it was going to be the highs, internal range highs that were created during the AM session. So the AM session was moving down, so we can expect the PM session to go attack the buy side liquidity, internal range highs in the lower time frames within this down move. And also we can expect price to want to draw back to buy side and to the premium zone where it can be used to take to go down into the sell side liquidity. In this case, the premium zone, this was where I used, and you can see buy side liquidity right where this order block was, 15 minutes order block. And we look to sell from order blocks, fair value gaps, that's in premium, and buy from the ones in discount. So when I saw this was my main target. Then Lastly, I was feeling it would get here, but I know the order block could make it not really get into this fair value gap here if this order block actually held, and that's what it did. So this was where I took this trade. Now let's go straight to the time frame. And also before I'm going to show you guys that I called this trade out too. As you can see, it's the same trade right here, the 5 minutes time frame when I called it out. As you can see, this was the same trade right here, called out in my public telegram. So let's get straight to why I took this trade. I took this trade for this reason. Like I explained, I was expecting the up move, and I've explained why I was expecting the up move. Now this is the NY afternoon section open. That's the open price, my local time zone, 1 p.m. NY afternoon open. Now price did this and it dropped down. Trades taking out internal sell side liquidity of this. Buy side got taken out, sell side got taken out. Now let's go to the 3 minutes time frame. I think you're gonna see this better. The reasons why I took this trade. The buy side got taken out, sell side got taken out. Remember, we're still bearish. So I was expecting this to be like a retracement up to this zone, right? Which everything got there straight. As you can see, TP1, and finally, final TP got hit. Posted in my public telegram, everything. So I took this trade because of this reason. One, price went down to sell side liquidity. And now, if we actually really wanted to go down, these highs were expected to hold price. Because come on, see, buy side liquidity has been raided, sell side liquidity has been raided. These are new dealing range. We look to sell from these zones, right, in premium. And as you can see, price had already drawn to premium. It had drawn to premium, created another buy side liquidity, which was rated over, right? This buy side liquidity was rated over, and another shift to market structure. So this high had taken out the buy side liquidity, which was this, and had a shift to market structure. So it should hold price and take price down. But instead, what did this price do? What did price do to that high? It took out that high. So I saw that absolutely as my shift to market structure. Like I know this high was meant to take price down from the way I view the market and from the way that I've seen things back in my back testing and everything and my system. If I wanted to sell this market, I would be looking to sell and not expect this high to get taken out. But for the fact this high got taken out with displacement, then I was like, yeah, we're going up. Like the bullish idea that I had in my mind was beginning to make sense. So I took in this buy. I had my first take profit in 1-to-1 risk to reward ratio, so I could go break even, which is part of my plan. Then the second take profit was around the 1-to-2 risk to reward ratio, and the final TP got smashed. Now let's go straight into the next point. That's the last point for this video. Now the last point that I need you to take note of is don't over leverage. If possible, risk lesser on your next trade. Now I'm going to show you how I implemented this. On my public telegram, people who follow me up there know whenever I use this yellow caution symbol, it shows that I'm telling them that I'm risking 0.5 R on that trade, which is 0.5% of my initial risk per trade. Whenever I say high risk, that's exactly what I mean too. And you can also see when the final typical hit, I said total reward of 1-to-3 risk to reward ratio risking 0.5 R. Now there are actually people who do this, right? Let's say, like I said in the beginning of the video, right? You lose in 4 trades in a row. The first trade, you lose 1%. You say, all right, I'm going in second percent. I'm going 2% in the second trade. You lose the second trade, now you're down 3%. You said, all right, third trade, I'm going in 3%. You lose the third trade, now you're down 6%. Then the fourth trade, you lose the fourth trade by risking 4%, and now you're down 10% in just 4 trades. Imagine what that's gonna do to your psychology. And you might be wondering, do people actually do this? Yeah, people actually do. And if you're thinking like that, then you're on a good side, because there are people who actually do this. And also, if you do this, then you gotta change, because these were the things that used to mess up with me a long time ago, and I know these were the things that I had to break out, I had to stop for me to start seeing certain success in what I was doing. So in the next trade, if possible, to help you risk less, because if the next trade is a loss, then yeah, it's a loss. But the fact that you risk less, yeah, it's not really gonna affect you that much compared to if you risked more. Now in this case, I lost 1% right here, and I made back 1.5% right here. So I made back my loss with an extra profit on it, right? So this is how you recover from a loss. These are the points that I had to put in together that I know could help you recover from a loss. Yeah. So if you watched down to this point, I really appreciate you. Thank you for tuning into this video. One way you can show your appreciation for this video is by joining my public Telegram. Yeah, I post my signals absolutely for free, and follow me up on Instagram and also on my Twitter. Like I said at the beginning of this video, one last important thing I need to do is like this video, man, and subscribe. Turn on post notification if you're new. By liking this video, it makes YouTube recommend my video to more people. So that's the little way you can show me you appreciate the contents that I bring out. So thank you for tuning in. Stay blessed. I'm out.